Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 9th of May 2019, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to touch on here is Nikkei225. Now, as you can see, we haven't touched this index for quite a while, so we do have our arrows kind of slightly shifted. But what's interesting here is that, as you can see, that the index is now getting back inside its this little range that it was trading in for a while here. So from around the mid-February up until the mid-April. So now the index is back in this range. So it broke below this 21,875 zone and seems to be now pushing further down. Now, of course, all this activity is still kind of looking quite bearish because, as you can see, that now the index is back below the 200 EMA here on the 4-hour chart. Of course, the tensions between the US and China are not helping this index as well. So all this kind of is adding up towards the negative and kind of impacting the index in a negative way. So for now, certainly we could see further declines. We are still aiming for lower, especially if we see a drop below the recently established little low. And let me just quickly put that one on the chart. So that's approximately around here, around the 21,300 level, 315 approximately there. So basically, if we see a drop below the 21,315, then yep, we could this could open the path towards slightly lower areas. Ideally, what we're targeting here is, of course, the area around the 21,000. That's going to be our first target area. So roughly, basically between the 21,000 and the 20,972, something like that, approximately there. In between here, there could be some other obstacles as well. So, like for example, we could take maybe some of these here, like the area around the 21,190. But still, overall, kind of the game plan remains the same here. So if we see a drop below this recently established low at 21,315, then yep, further declines could be possible again. So don't get me wrong, we may see something like this happening where the index could retrace a little bit back to the upside here, maybe test this 21,570 level, which is around the 200 EMA here on the 4-hour chart, and then maybe sell off again if it struggles to push higher. Now, also what you could keep an eye on here, and actually let me just get rid of this line here. You can draw a new one here, a bit of a tentative one, but nevertheless an upside support line here. So basically this upside support line is taken from the lows of December, and this is what we're going to be looking at here. If we see a pushback above this 200 EMA, of course this could increase the chances for Nikkei to travel back up here, but initially we will only target the area around the 21,875. So before kind of we're not going to go that much higher. We're going to see how it's going to perform around here. If it breaks that, that's great, that's wonderful. We could see a further push higher. The only thing is, don't focus on this upside support line too much. Again, it might hit it, it might not, might kind of respect it again, it might not. But to be honest, the more important level here could be around this 21,875 zone. So basically keep your eyes on down. If that one gets broken, then you have further acceleration to the upside could be possible. For now, but for now it seems that not all is good on the on this front here for Nikkei. So even like I said, even if we see a small retracement back up, still keep your eyes on this 200 EMA. If it travels higher but fails to kind of break above this, then we may see another leg of selling. Or like I said, straight away it might not even retrace. It could drop below the 21,300 315 zone and then target this key area of support near the 21,000, maybe just slightly below that as well. So keep your eyes on that one, guys. Very quickly on WTI oil. Now I've looked at this one previously this week, so I was telling you guys to keep a close eye on this upside support line. Of course, the price continues to kind of range around it. So in other words, it's actually now kind of breaking above it, then dropping below it. It's like it's acting like a nice spear here. So to be honest, we could in a way get rid of it, because what I wanted to show you else here to keep a close eye on, and you probably, some of you already kind of noticed this, but just to quickly draw this, so we do have a triangle formation here. Basically we have a nice squeeze here, nice coiling up here of WTI. So in other words, we could see maybe a pop here. If we do see a push above this upper side of this triangle, this symmetrical triangle, then yep, we could at least target slightly higher levels. We will initially aim for the 63 zone, but to be honest, this is the area where we could become a little bit more comfortable if we see a break off. So if we see a nice good strong push above it, then this could potentially invite more buyers here, could raise kind of confidence in the further acceleration of the price, and we could see a further push here towards the 64.65 zone, which is near the highs of the which is actually near the highs of here, near the highs of April, the beginning of April, of course, but slightly above that we do have this little peak here, which is around the 64.75, something like that zone. So also could be that little nice good target here for the buyers to test if we see a push above the 63 zone. For now, of course, keep your eyes on this little formation. In terms of the downside, certainly if this lower side of the triangle gets broken, then we may see a slide towards the 60.35, a very important support zone. But if that fails to withhold, then further declines are possible, guys. So we may even see a drop below the, of course we may see a drop below the 60 zone, the psychological 60, and then yep, further declines towards maybe the 58.20, which acted as a very good area of support here back in the end of March, on the 25th of March, and also on the 28th of March. So keep your eyes on that one. Jumping into Bitcoin, so kind of it's managed to recover some of its losses here. Yeah, the day on Wednesday, on Tuesday, and now it's kind of pushing higher. Now this is what I was talking about, so keep your eyes on this 6,220 6,240 50 area. This is where the crypto is balancing around. So in a way, of course, this is showing good signs here. We may see a further continuation here to the upside. We're still targeting this area around the 6,500 level. Let's see if it actually plays out or not. Just to kind of remind you what that level was, if we go back into history a little bit here, this was basically the high here of 14th of November, if I'm not mistaken. So there we go, around the 15th of November, 14th of November, guys. So basically the high around there, from which, as you can see, the crypto then sold off heavily and kind of traveled further south. Now it has a good chance to test this key area of resistance again, the 6,500, and this is going to be very interesting to watch, because if we see a push above the 6,500, this could be quite interesting, because we could see maybe further acceleration to the upside. This would confirm a forthcoming higher high, and yep, we could then maybe target the areas like the 7,000 or even 8,000, but that's of course in the future. For now, from the very short-term perspective, keep your eyes on this 6,500 level. Let's see if it actually gets tested or not. In terms of the downside from the very short term perspective, as you can see, it traveled higher. We may find a good potential area of support here, somewhere around here, maybe around the 6,100 level. And if that gets broken, then 6,100, 6,090, something like that. So if this gets broken, then we may see a slide back down towards the 5,750 zone. Now, just this level here acted as a good area of resistance previously. And if I need to go back into history here, you can see that it kind of held the price from pushing higher. So this time it could take the role of support, but still we have this upside support line here taken from the lows of the 26th of March, which also could be tested, and in a way we could see something like this happening as well. So that's why, guys, even if we see a slide lower, this could be short-lived, but if this upside support line gets broken, now this is where it could become tricky for the bulls again. So we may see further declines to the downside, guys. So AUD-USD, very interesting pair. So for now, of course, this is not looking quite good for AUD-USD bulls. You can see that the pair traveled higher on Tuesday, managed to explode here to the upside, but kind of quickly retraced back down, and now it's kind of testing its key area of support here near the 0.6970. So this is going to be a critical point here for AUD-USD, because if this gets broken, now this is where it could turn out to be quite ugly, because we could see further declines to the downside here. We may target this little area here, the intraday swing low of the 2nd of January, also the lows of the 3rd of January, which are around the 0.6925 zone. So approximately there, guys, maybe just slightly above that, few pips higher nevertheless, but still this is what we're going to be targeting, the 0.6925, if the 0.6970 level gets broken. In terms of the upside here, well, we need to see a nice good push back above the 0.70 level, the psychological 0.70 level. This way we could then target the 0.7025, or even actually going a little bit higher here towards this week's highs near the 0.7049. So 49, 48, approximately there, 48, let's put it there. So this is our game plan for the upside, but again, for now it seems that the upside could be slightly off the table, but then again, we cannot really say that we're now very bearish, because it's still holding up above this 0.6970. We need to see that nice good clear break here below, and the close, especially close of the 4-hour candle below this level. This way it could open the path towards the 0.6925 level, so keep your eyes on that one. Very quickly on EURNOK, so of course keep your eyes on this morning's interest rate decision from the Norwegian Central Bank, and this is where it is right now. So the pair is currently trading above this little upside support line, which is a good sign for the bulls here, but we may see maybe a small drop back down here during the release. The Norwegian krone might strengthen, but to be honest, if it continues to trade above this upside support line, we may see it curving up and pushing higher again. So of course, initially, if we see something like this, initially we will target the 9.84 level, approximately there, or even 94, or even this week's high, or yesterday's high, which was near the 1.9370 level, something like that. So a nice good pop above it could lead the pair towards the 9.86.40 zone, which previously, as you can see back here on January, in the 2nd of January, acted as a good area of support, but as well slightly above that we do have this, as you can already see, this little peak here that we saw here in March, so basically the highest point of March, near the 9.88 level. So approximately there, guys. So keep your eyes on that one. Very good potential target, but in a way we need to see a nice good push higher here, a nice good break above the 9.8370 or 84 level before we could consider these higher areas again. But like I said, during the release, be very careful. careful. That's coming out 9 o'clock UK time, I think. So keep your eyes on that one. So 10 o'clock European, but as, or should I say even 8 o'clock GMT time. So be very careful with that. Like I said, we could see maybe a small slide lower, and then yep, we could see maybe if this upside support line continues to hold, then yep, we may see another push higher. As you understood, if this upside line breaks and we see a drop below this little area here, let me just quickly put this on the chart, below this little support zone near the 9.7760 level, approximately there, then potentially this of course could open the path towards slightly lower levels. Initially we will target the 9.7330 area, which marks the lows here of the 3rd of May, and if that fails to withhold, further declines could be possible, and this is where we will aim for the 200 EMA again. But for now it seems that it doesn't seem, but until we're trading above the upside support line, we're going to remain somewhat more positive on this one. But again, like I said, we will be very careful around here, around this upside support line, and around these these levels that I've just mentioned. So if we see a drop below the 9.7760, then yep, this could open the path towards lower areas again. And the last pair I wanted to quickly touch on, and that's USDJPY. Very quickly on this, not much we're going to talk about here, but the fact that it continues to slide lower, it is aiming currently for its key area of support here near the 109.70. That's going to be very interesting to watch if it actually reaches that, and if this level actually will be able to hold it again. If it does, then we may see something like this. Of course, we may see a nice rebound from it, and potentially maybe push higher back towards the psychological 110 zone. For us, let's say, to start considering higher levels, at least some higher levels, we would like to see a push back above the 110.25 level first, and then we will target the areas around the 110.45 or even 110.80. In terms of the downside, well, if the excuse me, if the 109.70 level gets broken, now this is where it could turn out to be quite ugly for this pair. We may see further declines. Slightly below that, we do have another good potential area of support near the 109.60, just 10 pips lower, but still nevertheless a good strong area. But if that fails to withhold, now yep, deeper extensions to the downside could be possible. This is where we will aim for the 109.10 or even lower. For now, all eyes are on the 109.70. The last resort would be the 109.60 in case we see like an overshoot here, and then we'll take it from there. If we see this area holding, then we may see a bit of correction back to the upside, guys. Okay, I hope you found it useful. I'll have to wrap it up here. Thank you very much for watching and listening, and if you want to join me later on at my Traders Tea Time, as always, 13:15 GMT time. For now, I hope you have a wonderful trading day, guys, and I'll see you later. Bye-bye.